Thank you for attending our Lunch and Learn webinar today, uh, generously put on by the Bonadio Group and Tim Doyle and Jess Ladon. Uh, the Bonadio Group is one of our newer business leaders and great partners in municipal government. A lot of knowledge through their firm, and I'm not going to take up a lot of your time. You're not here to listen to me, but you're here to learn something about the overtime implications and the big, beautiful bill. So with that, I'll introduce Tim Doyle, one of the partners of the Bonadio Group. And again, thank you everyone for being here. Just as a reminder, we'll send out a link to the video so that you can watch it later or share it with other staff. And we do have all the mics muted because we had a substantial interest in today's webinar. So once it's time for question and answers, please use the Q&A feature in the Teams as the mics will be muted. So thanks again, and enjoy the presentation.
Thanks, Chris. Yes, so my name is Tim Doyle. I'm a partner with Bonadio, and I'm here with Jess Ladon today. And we're going to talk a little bit about the new overtime pay reporting requirements. We'll also touch upon some other things that are included in that bill, but really focus on the overtime. As Chris mentioned, you can either answer or ask questions in the chat or the Q&A. Jess and I will keep an eye on that throughout. Certainly feel free to ask them as we're going through each of the sections. It might be a little easier to answer as we're on topic if you ask the question. So please keep the questions coming. Jess and I have done this a few times over the past couple of months, and we get some really good questions. So please feel free to jump in. We do have our quality control team tries to keep us out of trouble here. And so we do have a general disclaimer. I won't read the whole disclaimer, but what the concept is that even if we're answering questions and such that you may have, we don't have all of your facts and circumstances, right? So it's more of an educational and just sort of a high level answer versus if we were actually working with you and understood all of the facts and circumstances in your cases. So again, take these as educational. We're here to talk about what's changed, maybe how you could get your arms around it and implement some of those changes. And with that, your speakers today, myself, Tim Doyle. I am a partner with Bonadio. I've had 33 years of public accounting and have worked the last 25 years solely in the governmental sphere. So all of my clients are governmental clients. While I've done audits in the past, over the last 3 or 4 years, I've really focused on consulting. We'll talk about some of those types of services we provide, but really just consulting on the governmental side. But everything I do is governmental. In public accounting, that's been a great thing. That means I don't have a tax season, right? So I don't have to worry about that, but have been working with all types of governments throughout my career. Jess?
Hi, everyone. Thank you so much for being with us this morning. My name is Jess Ladon, and I am the Principal Tax Technical Lead at the Bonadio Group. I actually see an error on this slide. I'm not a CPA. I am an attorney. I'm barred actually in Pennsylvania and New Jersey. I'm a former Bucks County resident for many years. And I work really with kind of changing legislation, new IRS guidance, anytime there's a new statute or new regulation, kind of help to make sense of that. So I would say I'm an attorney that plays a CPA on Teams, but really focused on kind of, like I said, the changing legislation. I come from a government relations background, so I try to keep my finger on the pulse of what's changing and try to translate some of that legalese and IRSEs into some plain language. So excited to be with you today. Thank you for having us.
Yeah, and Jess does a great job on that. Every time there's something new out there, we reach out and say, how does this work? And Jess is in the details. She knows how all this stuff was written and can give us a lot of information. So just really briefly, a little bit about the Bonadio firm. Yes, we are a new partner with the Pennsylvania Municipal League and happy to join on. We were founded in 1978. We are a top 40 CPA firm. So out of roughly 40,000 CPA firms across the nation, I believe we're 39. It changes all the time, but that means we're the 39th largest CPA firm in the nation. We have approximately 1,100 employees. And then, while we were based out of New York, we've been growing into the North Atlantic region in recent years. We have offices all throughout New York State, but also in Texas, Delaware, Vermont, and Virginia. So we really are growing into that area and working with all types of governments. We're a full array of audit, accounting, and consulting services. So the typical things that people think of when they think of CPA firms. We have a public sector team of over 100 professionals that covers just public sector governmental clients all year round. So very focused on that. It's a large piece of our practice. And then the other thing that we like to let people know too is we have about 40 professionals that are information technology specialists. So they're not CPAs, they're not CFEs, but they're all the different acronyms that go and follow their name in the IT profession. So we help a lot of governments with information technology assistance as well. Who we serve, pretty much anything, any type of government, from the federal all the way down to the smallest village. We work with all different types of governments, over 300 governments throughout the year consistently. It's probably even closer to 400 now, but we have a team, again, of over 100 people. They're just working with governments all throughout the year. And what do we do? Again, it's a long list. I'll just focus on a couple of key areas that in recent years have sort of spiked. And we know that in the Northeast, we see this a lot. Folks struggle with having accounting professionals, being able to keep up with their financial reporting, those types of things. While we do the traditional audits that we mentioned there, outsourced accounting's become a big piece of what we do too, whether that be year-end cleanup and helping you get your final reports done for the year, or we have some where we just take over the accounting on a daily basis, cut the checks, do the bank reconciliations, pay the bills, all that kind of stuff. So outsourced has been a very big growing area in the governmental arena for us, just because folks are struggling with trying to find people. And then additionally, we do a lot of budget strategy and other strategy assistance with governments as well. So whether it be consolidation or shared services that they're looking at, we do different things like that. So again, we work with governments all year long, and these are some of the things that we do. All right, without further ado, we'll start into our agenda here. Jess and I are going to talk a little bit about an overview of OBBBA, and then get right into the overtime pay deduction and how it works, how it will impact you, what you can do to try and make sure that you're in compliance with the reporting. We'll touch upon some of the other areas of the Act, the tip income deduction, the employer meal deductibility changes, and the Trump accounts for children. But we're not going to focus we wanted to keep the information in the slides, but we're not going to spend too much time on those because those don't directly affect you. It's really the overtime where you're going to see the effect. And then we'll talk about some action steps for you in terms of what do you need to do to implement this. And then Jess and I will wrap up with some summary and final thoughts. So a quick overview of the Act. It introduces new and tax provisions, some temporary, some permanent. It impacts employees, employers, and families. And we will touch upon, as we go throughout the presentation, how it affects your employees, even though that's not your direct concern, just so that you understand what the effects are and how if you're getting calls from them, you understand how the process works. We'll focus on the areas of overtime pay deductions, tip income deductions, employer meal deductions, and the Trump accounts. And then finally, many provisions are effective tax year 2025. right? So we'll talk about what happened with that. What, while it was effective 2025, there's some transition relief that was provided, which Jess will touch upon. And so that allowed you a little bit of relief in that first year, but it was actually effective for tax year 2025. So Jess will take us into the overtime deductions now.
All right, thank you, Tim. Yeah, let's get into kind of the meat of it. And thanks for the overview of One Big Beautiful Bill Act. We're coming up on the 1-year anniversary from when it was signed into law, July 4th of last year. So like you said, 2025 was kind of a transitional year. We're really in kind of a live guidance environment right now. So, the law was enacted almost a year ago, but we're getting new guidance all the time from the IRS and the Treasury. So, the information today is as up to date as we can be. But of course, there'll be continuing guidance all the time as things progress. So let's talk about the overtime deduction and really where we want to focus today. So this is a new and temporary federal deduction for qualified overtime pay. It is available regardless of whether a taxpayer itemizes or does not itemize. So in that sense, it's an above the line deduction available for anyone with the type of qualified overtime pay that is eligible. So what type of pay is eligible is really the kind of the main question here. Of course, if you read the news, you'll see no tax on overtime, and that sort of can have implications of what this might mean that may be a bit misleading. So it's really not all overtime pay that we're talking about here. It's only the Fair Labor Standards Act required premium overtime pay. So that means what is required in that law, the FLSA, that's paid above and beyond an employee's regular rate. So kind of plain language example on this slide, you can see if an employee's regular rate is $20 an hour, they're making $30 an hour at that time and a half overtime calculation. It's that $10, that and a half, that halftime premium that they can go ahead and deduct on their individual tax return when they file that. Who can claim this? FLSA non-exempt employees. So essentially anyone that's non-exempt from that law means overtime is required to be paid to them, and therefore they could take the deduction. Importantly, it is required that the individual has an SSN on their tax return as well. So we're going to get into some of the details on this. Anything to add, Tim, to kind of the overview here?
I just emphasize your example there, that I think a lot of people and a lot of your employees probably aren't aware that you're only going to report the halftime, and they're only going to be able to assess whether it's deductible to them on the halftime. So I think we try and stress this is that your payroll folks may start getting calls when you file this next year with your W-2s, where you've got employees reaching out and saying, hey, I had a lot more overtime than this. It's only the halftime. And then I know Jess is going to get into, as we go through the slides too, what actually qualifies as this type of overtime. So your contractual bargaining agreements, your employment agreements with your staff may allow you to pay overtime on things that don't qualify for this, and that's still valid for you to pay according to your agreement, but they're not reportable and or deductible here, which I know Jess will get into soon as well.
Yes, great points, Tim. Thank you. Okay, so let's look at some of the, there we go. Some of the limits and the timing for the overtime deduction. So there is an annual cap per taxpayer. They can deduct up to $12,500 of qualified overtime pay. And then for married taxpayers who are filing jointly, that's bumped up to the $25,000 total in that return. Importantly, if there is a married taxpayer and they are filing separately, then this deduction is not available to them. So if they are married, they must be filing jointly in order to claim the overtime deduction. There are also income phase outs. So this is essentially capped. So when your modified adjusted gross income exceeds the threshold shown on this slide, it'd be 150,000 for a single taxpayer or 300,000 for married filing jointly. There is a reduction, essentially like a 10% phase down. That's $100 for every $1,000 over that threshold. And then, it would be fully phased out when you hit 275,000 for a single taxpayer or 550,000 for joint. So, it is essentially capped at those thresholds, and then there's a phase down as you increase modified adjusted gross income. Potentially the most important bullet point on this slide is the last one. Right now, as the One Big Beautiful Bill language is written, this is only available for tax years 2025 through 2028. So it is temporary. It will, unless additional legislation is enacted that changes this and extends this program, it will terminate at the end of 2028, and that deduction will expire. Tim and I talk a lot about, maybe it will be extended. That would be just a guess at this point, and who can guess what our legislators will do in the future, especially in 2028. That's an election year. I'm sure there'll be some politicization of this provision, and we'll watch what happens as that continues. But it's a popular one with bipartisan support, so it is potentially something that would be extended after that original expiration date. All right, so moving ahead to, sorry, Tim, my click ahead isn't working, so if you could help me advance. Thank you so much.
Yep.
Okay, so tax and payroll considerations. So this is where some of the confusion comes up, when Tim and I are speaking with clients. There's confusion around, what do I have to do as an employer? What do my employees have to do as individual taxpayers? So this is a federal income tax deduction that's available to individual taxpayers on their 1040 returns. This is not an exclusion from wages. So this is not something that's withheld from wages on their paychecks. They are still wages. They are still subject to tax. Again, something that people might come away from just reading a headline or two with the wrong impression on. There is still tax on overtime pay. So things like Social Security, Medicare, state and local taxes, unemployment, all of those are still taxable to overtime pay. There is no automatic payroll exclusion. Employees could adjust, their W-4 withholdings and make adjustments there as they can, at any point. But generally speaking, there's no change in the withholding and the payroll. Again, this is something that, and we'll get into the details of the reporting, but essentially this is something that the employers now have a new reporting obligation, and then the employees have the option to take the deduction if they are eligible. Another important piece is the state tax treatment. So, of course, One Big Beautiful Bill Act, this is a federal law, this is a federal deduction. But we know, here in the United States that we have kind of a patchwork as far as states and how they follow federal treatment for tax law. So for you guys, speaking with a Pennsylvania audience, traditionally Pennsylvania, it does not incorporate federal changes to their state taxation. So there's no need, like there is in some other states, to kind of formally decouple and say, okay, we're opting out of that provision. Pennsylvania, it simply doesn't kind of hit the basis anyway. So plain language, there is no state level overtime deduction in PA. This is just federal at this point.
Yeah, and Jess, if I can just sort of highlight the last two slides that we talked about, will give you a good idea of the slide before this talks about when your employee goes to deduct it, what are the mechanics of it, and what gets phased out, and what might they be able to deduct and what they might not be able to, and how do they have to file their tax return, for instance, filing married versus jointly.
Mm-hmm.
This slide talks about on the everyday payroll this year, when they're getting paid, sort of what's happening, right? The fact is the tax tables did not change. So the fact that whether they have overtime that's qualified or not doesn't affect what gets withheld on their check. It's still FICA, Social Security, Medicare taxes. Those are still in there. So you may have employees coming to you if they, for instance, are working the same amount of overtime as they did last year and saying to your payroll folks, hey, why am I getting paid? I thought I was going to get a tax break here. Again, we don't want you, and we don't suggest governments provide tax advice to their employees, but we want you to understand what the ramifications are so that if they are calling you, you can say, well, tax tables didn't change. Nothing gets affected until you file your tax return. And if they're calling you with, year-end tax questions, I would not suggest that you give tax advice, but at least you would know, okay, there are a lot of different requirements and phase outs. And so at least you're aware. Again, we're not suggesting that you give them any advice on it, but we want your folks to understand both on the first slide, how do they file their returns and what are the things that they can get, what gets phased out. And then in this example on this page, what's their everyday payroll going to look like, and that they shouldn't expect for there to really be a change here. It's going to happen on their tax return.
Yeah, perfect explanation. And we can get into probably, we'll speak to it a little bit on the next slide as we start to get into kind of calculating, reporting. But I want to circle back to your point, Tim, as far as FLSA and hours worked and the 40 hours a week. So we'll get into that a bit here. Really, from an employer perspective, this is where kind of the meat of the issue is. What do I need to do as an employer? What do I need to report to my employees? And how do I go about doing that? So for tax year 2025, like we've alluded to, it was kind of a transitional year. The law was enacted kind of midway through the year, 4th of July, and they said this deduction is available for the entirety of tax year 2025. So in that sense, it was available retroactively. Because of that timing discrepancy, the IRS said, we understand, you're not going to be able to calculate and report qualified overtime to your employees for 2025. So because of that, there will be no penalties for not sending a statement to your employees saying, here's your qualified overtime that you could deduct. They basically said, if you're kind of doing everything else that you need to do, all of your information reports are correct, it's fine if you leave that off. They essentially put the responsibility on the employee to say, if you do feel that you're eligible for this overtime deduction, use a reasonable method, determine the amount of qualified overtime pay, and report that on your 1040. Going forward, that's going to change. So for 2026, 2027, and 2028, of course, asterisk potential continuation if the law is extended, employers will have to report on the W-2s the specific amount of qualified overtime pay. So this is going to go on the W-2 specifically. We've already seen, and actually I have a slide later in the deck, what the W-2 looks like. It's box 12 and the code is TT, and that's going to be how the employer reports to an employee their qualified overtime pay. In the blue box on this slide, you can see FAQ, fact sheet, and a couple of IRS notices. When you do receive these slides, those links will be live for you, and you'll be able to click and check out some FAQs. These are direct from the IRS and very helpful. I will say especially Notice 2025-69 has a lot of great examples. I know, for county government, public sector, there is consideration around, additional types of employees, for example, fire, police, that may have non-traditional kind of work weeks and work periods. So there is information in those notices about calculating overtime pay for those specific populations. So let's pause on this slide and talk a little bit about that, Tim. So the 40-hour work week is an important piece because this law ties back to FLSA, looks at a 40-hour work week and says qualified overtime pay is what's paid for hours worked above and beyond the 40 hours in a traditional week.
Yeah, we're working with a lot of governments right now to try and help them understand this and then implement it. And we generally look at three phases. First, we look at their employment agreements to understand how they pay overtime and when they pay overtime, what their standard work weeks are. The second phase is once we understand that, we look at how does that measure up against the FLSA and say, okay, here's the requirements for reportable overtime. Here's what you pay overtime. And we sort of identify the gaps. The next step is we say, okay, how do you gather that information? So for instance, do you have a written timesheet? Do you have a time card? Do you have a software program that people report their time into? And then does that have the ability either on a timesheet or within the software to separate the piece that is actually hours worked over 40? And then the last piece is, okay, now that you've obtained that information via timesheet, time card, how does it flow through your system so that we make sure that it winds up on box 12 on the W-2? So that's sort of the process that we do. So one of the keys when we're looking at those agreements is your agreement may very well say, hey, you have a 35-hour work week, and if you work over 35 hours, we're going to pay you overtime. That's valid. That's fine. You should pay the overtime, obviously. But if they worked 40 hours in their 35-hour work week, you would have paid them 5 hours of overtime, but none of that qualifies for reportable here because it's not worked over 40. The other example we see a lot of times too is where holidays kick in, or vacation or sick pay too. If you're using that in a given week, say 8 hours of sick time or 8 hours of holiday or vacation, and you've got a total of 40 hours that you put in that week, or let's say 42, but 8 hours of that was not worked. So you really only have 34 hours of worked time. Even though your agreement might say you pay overtime, again, it's not qualified overtime. The qualified overtime is for hours worked in your work week over 40 hours at the halftime rate. So those are some of the things we see. I think we may have had a question in a recent one that we did also, Jess, where somebody asked, what if I have a 35-hour work week, but I pay overtime when people work more than 7 hours in a day, and they put 2 more hours in a certain day, but they still don't go over 40 hours for the work week. Still, you didn't work over 40 hours, so it doesn't qualify to be reported here. So it's all those little nuances that you have to look at and say, it's okay for us to pay the overtime. That's our agreement. We're definitely going to do that. But unfortunately, that makes it not as easy to just say, what was my overtime? Okay, that's what I put in the box, right? So that makes it a little different. And then just sort of the last thing too, the last example is you may very well have your employees calling up when the W-2s come out next year and say, no, I've been tracking my overtime. I had this much in overtime and it doesn't match what's in the box. Well, that's why it's important for us to have this discussion today, because yeah, it may have been overtime, but it doesn't meet the definition of this reportable overtime.
Yeah, which is absolutely a wrinkle that we can't expect, most taxpayers to be this in tune with the law to know, oh, it's only the FLSA required overtime portion. But that is obviously an important wrinkle. So, yes, thank you, Tim. Okay, so some employer action steps around overtime specifically, things that we've talked about, but really configuring your timekeeping system to isolate just that premium portion. That is the only deductible portion. That is the qualified overtime pay that will go into box 12. So how are we determining that in our timekeeping system and kind of isolating just that premium portion? It's important to document the methodology used. So this is, of course, from an attorney's and CPA's perspective, an essential step for kind of audit preparedness is how did we come up with this number? What was the decision making? Kind of keeping those decisions documented, especially kind of in the transitional year. 2025, we're already really kind of through it. But if you can even retrospectively go back and say, here's how we came up with numbers, if you did report anything to employees, it's always good to just have that documentation handy. Preparing your HR and payroll teams, of course, is an essential piece. Like Tim just said, employees might have questions, when they get these forms, they get their W-2, at least knowing enough to answer those questions, certainly being aware that you don't want to start giving tax advice because, of course, every taxpayer's situation is unique and may require actual formal tax advice, but just simply understanding this is why this number doesn't match up with your tracked overtime. It's only this premium portion. Those types of high level things I think are really important to equip your HR and payroll teams with so that employees feel supported, and it just will make it an easier and more efficient discussion. Communicate to employees where to find the information. This is all new to them as well. This is where you look. This is where your deduction is noted. And then, of course, the reporting codes. We'll get into that a little bit more on a later slide. And just retaining, kind of calculation support. I think those are the main things I would say, Tim, kind of calculating, communicating, and documenting. Would you agree that that's kind of where we land here?
Yeah, I mean, the one thing I wanted to highlight there is the third or fourth bullet down, communicate clearly to employees where to find the information. One of the things is we're starting to work with local governments on this, and we're doing that 3-phase, and we're saying, okay, read the agreements. How do you get the information? How does it flow through your system to the W-2? Is we're working with some governments to say whether it's a third-party payroll provider or a software that they're utilizing is, can you separately identify this overtime on the pay stub? And that, if you're able to do that, and depending upon who we're working with and how they're doing payroll, whether it's a third party payroll or in-house, if you can break that out and show that separate amount, that employee is going to see that all throughout the year. There's going to be a little less sticker shock at the end of the year when they get their W-2, and you can just say, oh no, we broke that piece out all throughout the year. Here's your total overtime. Here's your overtime that meets that definition. It's a little easier to explain to them than when they can see, oh yeah, that matches the total overtime that I thought I had, but oh, this is the piece. So I would just say, relative to that bullet, if you're working through this process by yourself and you're working with your software company or your third party payroll, ask if they can break that out. Now you've got to take care of those first 2 phases to figure out what it is and make sure you're gathering it. But then the next step is like, okay, can we not only get it to the W-2, but split it out and show it on the pay stub, because that's helpful as well.
Yep. Well said. Thank you, Tim. All right, let's see. Yes, we wanted to touch on tip deduction also, of course, potentially less applicable, but it does mirror the overtime provision very closely. So I think it's important to talk about. This is also temporary, the same years, 2025 through 2028. There's a deduction for qualified tip income. This is, generally speaking, going to be voluntarily provided cash tips. So, these are similarly to overtime going to be reported by employers and then taken by employees on their 1040s at tax time. The same guidance that's linked for overtime a lot of it does also apply for tip income, because they really did mirror these 2 provisions off of each other. So I wanted to just go through just a couple more details about it. On the next slide, we see kind of who can claim the deduction. This is, here, let me see. I tried to take control back, Tim, but I still can't click through. So sorry about that. So W-2 employees and independent contractors can take this. You can see the links there for the notices. But also there's a link here for what types of occupations apply. They wrote the law such that only certain occupations that are customarily tipped occupations are eligible for this deduction. So there is a link there. It's things that you would traditionally think of, restaurants, service workers, those sorts of things. But then there's also some that you might not think of. I know influencers, social media influencers made the list at some point. So that's all included on that list of eligible occupations. Similar limits and timing as far as the annual cap, and then a modified adjusted gross income phase out. Again, I won't go through these in detail, but we just wanted to have them on the slides for you as reference. And again, a lot of overlap between this provision and overtime. Similarly to the reporting piece, employers were given transitional relief for 2025, and then in 2026 and onward, they will have to report qualified tip income in box 12. Overtime deduction code was TT. The tip deduction code is TP, and they're both reported in box 12. Same notices here as for overtime as far as examples and some of that transitional relief for employer reporting as well. So this is a great slide to just see visually. We've been talking about the 2026 W-2s changing. So I wanted to include kind of a visual. Here's the W-2. That box 12 is highlighted with the yellow square. And then you can see on the right in the box 12 instructions, there are codes specifically for tips and overtime like we've been talking about. So you can see TT is for overtime, and then the employee is instructed to take the number from that box and put it onto their 1040 Schedule 1A. So actually, we've included that as well. This is a new schedule that is part of the 1040 individual tax return. You can see on this slide, this incorporates a whole bunch of the deductions from the One Big Beautiful Bill Act. So there's tips, there's overtime, there's the deduction for car loan interest included there, the senior deduction. But essentially, this is a new form to incorporate some of those new deductions. But again, this is where communication with your employees is key, because that box 12 TT number for their overtime is basically translated over here to part 3 of their Schedule 1A. Of course, enough reading of the form instructions, that's all very clear, but it's good to have kind of a high level understanding of where these numbers are flowing through so that the IRS is getting the information from the taxpayer.
Yeah, I always love campaign promises, and then what it trickles down to. This is a very busy form. There's a lot of stuff on here, and I almost feel like it should say, if we look at part 2 there, no tax on tips, and then it should say, except as excluded below, right? All the different exclusions, right? But the key there, whether it's tax on tips or tax on overtime, is for all of you to just know that you're going to report an amount. They may or may not get the full amount deducted based upon all the individual things that are listed here on that form. But this is both the W-2 and this form. I'm glad you shared that, Jess, because this really gives you a visual of sort of how those are being captured and where they're being reported, but definitely very busy forms.
Yes, very busy forms. Exactly. Okay, great. So a couple other One Big Beautiful Bill Act provisions we wanted to touch on. This one we get a lot of questions about. This actually was essentially a Tax Cuts and Jobs Act provision that the One Big Beautiful Bill Act kind of confirmed. But essentially what happened here was after 2025, there was a change in the law that a whole bunch of previously deductible employer provided meals and snacks are now non-deductible. Really, the language in the law is meals that are provided for the convenience of the employer. So we're talking about kind of on-site working meals, employer-operated eating facilities, so, cafeterias, snack programs, those sorts of kitchen rooms, all of those foods, snacks, meals become non-deductible in 2026. Employee training meals, if you're having a training lunch, those are now non-deductible. A big change from a tax perspective for employers based on the One Big Beautiful Bill Act here. There are some exclusions to this. There's other considerations. I get tons of questions around this provision, and they can be, very nuanced. I ordered a pizza, and we did have one prospective client there, but it was mostly internal. So, it's there's a lot to this. But I think from a high level, the main consideration is a lot of things are becoming non-deductible, but there are things that are not becoming non-deductible. So I wanted to address those here. Business travel meals, if you're traveling, those are generally staying where they are at 50% deductible. Section 274 is referenced there. That's really just about making sure that the meals are not extravagant, they're, documented, that sort of thing. As long as those traditional requirements are met for deductibility, those types of business travel meals will stay 50% deductible. Things like holiday parties, picnics, recreational or social events, those are remaining fully deductible. So, the holiday party at the end of the year, there's no change there. Meals treated as compensation, if there is a situation where a meal is treated as W-2 compensation, that is also remaining deductible. Section 274, that's still in play. Meal substantiation, I referred to that already. It's just kind of the traditional requirements there. And then if an employee operates any sort of eating facility where they're selling, food and drink at kind of an arm's length transaction to employees, there may be consideration there that they would still be deductible if they're kind of operating a paid cafeteria setup. I know, we have some hospital clients and things like that we've talked to them about those specifics, but that is a little bit of an exception to the non-deductibility as well. Okay, Trump accounts. This is another one we get a lot of questions about. We're all individual taxpayers, and you may have children, and you've heard the headlines about this. So this is a new tax-favored savings account for children under the age of 18. What they've done here is the Treasury Auto creates kind of a shell program, and then a parent or guardian would go in and activate and elect for their child to have one of these accounts. Contributions haven't begun yet. They're set to be allowed after July 4th of this year, so 1 year after the law was enacted. There's a $5,000 annual cap on the contributions to these accounts. And you can see up to $2,500 could be contributed annually by employers on behalf of their employees. There is also, there's headlines around this that children that are born between 2025 and 2028 may receive a one-time deposit of $1,000. I think that number may also increase. We've seen headlines around kind of private philanthropy. There's some individual giving that may increase that number. But essentially there may be a small one-time, well, I shouldn't say small, $1,000 maybe plus one-time contribution from the government into these accounts for certain eligible children. There are really specific withdrawal provisions and requirements here. We've outlined those on this slide. You cannot withdraw before the child turns 18. There's some limited exceptions there, but from a high level, that's the rule. And then after the child reaches 18, the account essentially kind of functions like a traditional IRA. When withdrawn, the earnings and employer contributions are taxable, but after-tax contributions would not be taxable at the time of withdrawal. So here's kind of, again, these will be live links when you get this presentation to the form to set this up, and the website where you can make the election to enroll. They've basically kind of put all of this together and put it out in time for everyone to sign up and begin making contributions by that July 4th date if they would like to. So all of that is here. That form 4547 is how the election is set up, and it is submitted electronically. It does not need to go with a return. It can be submitted at any time to the IRS.
Great. Jess, we have a couple of questions actually,
Great.
and I was able to read through them while you were speaking. I think they're things that we've been asked before, so I don't think there's any surprises here. But let me get your thoughts on this first one. So somebody asked, many contracts have a minimum call out, such as a 2-hour minimum. If an employee only clocks in for 1 hour, is the entire time of 2 hours considered qualified overtime, or only the 1 hour on the clock? I'm assuming that this is above and beyond the standard 40. So I think what they're saying here is, let's assume that this 2-hour minimum and or the 1 hour that they actually did puts them over let's say their standard work week is 40 and they have this. So the question is, hey, there's a 2-hour minimum. They actually did 1 hour. How would that affect them with the reporting?
I mean, my sense, Tim, is assuming it's above and beyond the standard 40 hours worked for the week, it would be the time worked.
Right.
So it would be that 1 hour.
Right. So there you have a nuance again where you're going to pay them for 2 hours,
Right.
but they actually only worked 1 hour in excess of 40 that given week. And assuming again there was no holiday or sick time during that week or anything, and they actually worked 40 hours and then got paid for this and worked an additional hour. So it's sort of akin to what we had said before of your agreements, your contractual agreements may say you're going to pay overtime or you're going to provide this 2-hour minimum, but the reportable still comes back to you're only going to be able to claim the halftime on hours worked in excess of 40.
Yeah, exactly. I mean, I think the way I've said it in the past is if you are more generous than the law requires because of a collective bargaining agreement or just your policies and procedures, that's great. And you'll continue to do that, of course. But for the deduction purposes, it's only going to be limited to that FLSA premium portion for hours worked over 40.
Yep, exactly. We have a similar question here, I think. When an employee is called out that they can only work 1 hour but get paid for 4 hours of overtime, how would that be handled? So let's say they were called out, they can only work 1 hour but get paid for 4 hours of overtime. Not sure I'm gathering the full extent of this question, but I think it comes down to that same concept.
Yeah,
did you
I think
work
so.
over 40 hours, right?
Yeah.
And so to the extent that you worked over 40 hours, the overage, the halftime on that is what you would pay.
Yep. Agree.
Yep. Let's see here. We have another one here. This one I think we've heard a lot of, so I don't think this will be too much of a surprise here. How are you dealing with comp time banked that may or may not be FLSA overtime? For past comp time banked, I went with the assumptions that it was all FLSA OT since I wasn't going back through the history over multiple years. Going forward, I am tracking banked time separately so that comp time used can be appropriately reported. I think there's an easier answer here, but what are your thoughts, Jess?
Yeah, the comp time one, I know you've dealt with this, Tim. They did issue guidance. The IRS spoke to comp time in those notices that are linked in this presentation. Basically, I think probably the most plain language way to say it is if an employee is paid comp time, they're receiving wages for time off that was previously accrued as comp time, then if it's for hours worked, then it is eligible. It's essentially the calculation they provided is it's 1/3 of those comp time wages, which you can see how they got to 1/3 as far as a time and a half calculation. If it is comp time that's paid out as PTO, again, those are not hours worked. Those would not qualify. I think that's kind of the easiest, most plain language way to address the comp time. Is that right, Tim?
Yeah, no, that's how I would take it as well. One of the things you have to look at too, though, is how do you earn comp time, right? Again, are you earning it on time that is over 35 hours, right? But you didn't really work over 40.
Mm-hmm.
So do you need to split that out and track that separately as to what was originally could have been overtime but wasn't? But yeah, so it's you do need to track it separately. You don't have to report some of the confusion we get sometimes is you don't have to report it until it's paid, right? So some folks were thinking that they had to report what was in the comp time bank, and that's not the case. You do need to track it so that you know what was earned in an overtime way, but it comes down to when it gets paid, not if you have a bucket of comp time, nothing happens to that until it gets paid, and then you have to determine, was this originally overtime?
Yeah, exactly. Yeah. And I would encourage you to check out that notice 2025-69. There are examples in there. Comp time is addressed in there. For my, in my world, it's a small IRS release. It's only like 30 pages. So to me, that's nothing. But I do think it is helpful to look at for comp time questions as well.
It's just some light reading, right?
Yeah, that's nothing.
All right. So we want to, based upon some of the things we talked about today, and certainly keep the questions coming as we're talking. We can certainly address anything else that comes through. And with that, I think something just came through. But we're going to address as we go through here, what are the action steps that you can do? We've talked about some of them as we went through, but sort of recapping, okay, this is what you're required to report. So what do you do? Let me see here if I have another question. Oh, actually, good question, Jess. Before we jump into this, can you please confirm what is qualified overtime as per FLSA for police officers working 14-day schedules? Is it hours worked over 86 in a 14-day period? I know you know exactly the whole nuance here with police and fire and
Yes, the short answer is yes. Because those populations have kind of their own work period calculations under FLSA, which this is correct reference here for the 86 over a 14-day period. That's exactly right. You would tie to the traditional FLSA work period, and then you key your deduction off of that. And that is exactly right. And it's the same for fire. I know with healthcare, there's often non-7-day work week work periods calculated for those types of shift populations. And yes, short answer is correct.
Yeah, we just got another one, police as well. They're the ones that get interesting. So good morning, everybody. I have a couple situations to run by you. First, our police get their holiday paid at an overtime rate if they work the holiday. Now, my understanding is that if that holiday OT is excluded within the 40-hour week, it is exempt from the OT claim. Just want to confirm that. So as I'm reading that, I'll just give you my first thoughts, but if I'm missing anything, Jess, let me know. So again, it would come down to how many hours did they actually work, right? So they talk about if that holiday OT is included within the 40 hours week, it is exempt. If they're taking holiday, I would agree. But if they're working holiday and you're providing them overtime rate because they're working it and they're working over 40 hours. Now, let's say they're doing that. You're giving them the holiday overtime, but still at the end of the week, it's only 40 hours. You're not reporting anything, right? At that point. Yeah. But if in that given week and or the extended week for police and fire, if that becomes over the 40 or the 2-week period that you have, and it creates time in excess of 40 hours in a 1 week, then yes, you'd claim that.
Yeah, agree.
Their second question was, are police get a premium rate if certain criteria is met? That is OT paid upon OT, right? So I get that you have to refigure their rate because of the premium when you're adjusting that. Let's see. So that is OT paid upon OT. I'm assuming that does not meet the OT criteria. I think there's a Q&A on that, isn't there? When you look at what rate to use.
Oh, so yeah, there's a couple nuances there. Yes, there's a Q&A. So there may be a situation where there is a blended rate or, especially in a situation where an employee is working under multiple regular rates in 1 week, they may work different shifts under different roles and have different rates. there is weighted or blended rates considered under the FLSA that is going to impact their regular rate for the week. And of course, when you then calculate a time and a half calculation on top of a blended rate, that may increase their overtime deduction there. So there is Q&A that addresses blended rates. But I will say, at a high level reading this, also, I'd be cautious about OT paid upon OT. You certainly don't want to start kind of double counting if there is a situation where there's kind of an additional or more generous than required payment. So I'd have to know more about that one, but I would also encourage her to check out the Q&As because I think they'll help a lot.
Yeah, and that's where we go back to that disclaimer, right? We don't know all the things that are going on in your particular municipality, but that's also why a lot of municipalities we're working with, and we're working through all these things with them. The third one I won't necessarily go through because it really just hits upon, if they're using vacation sick personal and how that affects the 40. And again, I would just keep it very simple. Did they work over 40 hours? That's really all you need to know. If they took time off with these different things, if they still didn't work over 40 hours, you don't have to worry about it.
Yep.
Great question. Great questions, everybody. So yeah, let's talk about action steps now with our last few minutes here. On the overtime, again, configure your payroll timekeeping to identify just that separate portion. Document your 2025 reasonable method. So if you're still thinking about 2025 and want to make sure that you've put something in your files to document what was the method that you provided, obviously you didn't have to have it on your W-2. Prepare for the 2026 form, W-2 box 12. Prepare your employees with frequently asked questions. So, why are the income tax deductions not different? The payroll exclusions, all of those things. Some tips that we have there, map tipped employees. Well, obviously you don't have that, so you don't have to worry about that. But for tips, these are some of the things to think about. The meals and snacks and the Trump accounts finally. What I would say to everybody is think about that process we're using right now with a lot of the municipalities that we're doing. So if you're going it alone and you're trying to do it, think about these three buckets. First, I want to look at my agreements. How do I pay overtime? And then how does that compare with the requirements here? Next step is how do I gather that information? Do I use timesheets? Do I use time clocks, software? And does that have the ability to, when I'm gathering it, show how many hours were actually worked versus total hours paid, right? And breaking that down. And then the third step is now once I can gather that properly, how does it flow through my system so that I know that maybe I can put it on a pay stub so people can see it regularly, but more importantly, that by the end of the year, it makes its way to that box 12 on the W-2. So those are the things that we do when we're working with a lot of municipalities on these types of things. I would also say Jess has a lot of great links in this that you can look at, but don't hesitate to reach out to us. We'd be happy to talk to you about your questions. If you want to and you want to work with us, we'd be happy to do that too. But sometimes we have folks just call up and ask questions, and that's fine too. Jess, any last comments as we're just wrapping up here? We got about 2 minutes left.
I think you've hit on a lot of the big things. We provided that slide just for some reference there too. I mean, I think the overtime deduction, you've hit on all the high level things. I'll also mention, since we talked about meals and snacks, I know for employers, that's a new consideration of what can I deduct, what can't I deduct. Looking at your general ledger, how you're documenting your spend on employee meals and snacks, because you may need to change your treatment of some of those come tax time. So that's another one, like Tim said, that we can definitely help out if there's questions around that too. But there's, some new kind of administrative considerations based on these changes. And I would say, do the best you can and get help where needed.
Yep. And when you do get our slides, we have provided contact people in the different areas where we work. Tim Ball heads up our advisory, and Tom Giantasio is the head of our public sector group. From a functional perspective, I handle all consulting. Keely Ann handles the assurance or the audit work. Charlie IT stuff, and Brett on the outsourced area. So if there's any way we can help you, we'd love to help you. We're looking forward to working with a lot of you as we started our work with the league this year. You can always reach out to either myself or Jess as well, and we'll put you in the right spot there. But Chris, any last words from the league?
Just want to thank everybody for staying on with us. We will make sure we get the video out to you as well as the slides. Really encourage you, if you have any questions, to reach out to these professionals at the Bonadio Group. They're really knowledgeable and work mainly only with public sector groups. Really a fine group of professionals there. So I think that's it. Thank you for a great presentation, and thanks everybody for your interactive questions. With that, I hope you all have a great day and an enjoyable Independence holiday. So have a great day. Thank you all.
Thanks,
Thank
everyone.
you. Bye-bye.